What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news along with our technical analysis thoughts on the S&P 500, NASDAQ, volatility index, gold and the US dollar. Well, it looks like American stimulus plans might be cancelled for October. Let's take a look at what the stock market thinks of that. Stay tuned. So today, the best place to start is with the news. Obviously, some bombshells dropped in terms of what happened over the last 24 hours. Powell came out, warned of a weak recovery without government aid. Obviously, there's some interesting statements that were said here. One of them being risks of overdoing it are smaller than too little stimulus. Pretty much this heavy-handed approach continuing in America in terms of how much money is being added to the deficit overall. And of course, that then Trump came out and said, we will not do any negotiations off the previous plan, and we're basically going to put this on hold until after the election. So if that is true, the stock market clearly was seeing, and I was as well, a good chance of a stimulus package being approved before the election. With this one tweet, they've taken away basically something that the stock market was pricing in, and instantly we see the stock market fall very sharply and very quickly. When we look at the rotation that happened yesterday, almost everything was down across the board. We had movements out of almost every stock except for, interestingly, the utilities sector, and that was led generally by, of course, FANG stocks being the Microsoft, Apple, Google, Facebook, and Amazon. Looking at the markets in broader terms, this is a bit of a minute by minute of what happened yesterday. They were relatively flat. There was a little bit of down trade here, and then of course a movement up near the end of the day. Notice though that the NASDAQ was actually the weaker of the stock market indices. This is pretty unusual. This doesn't always happen. Usually the NASDAQ's been the stronger of the indices. Of course, at the end of the day, we're up as much as 1% on the S&P 500 and Dow Jones. And then we fell off sharply after that tweet and after news came out that, of course, we weren't going to see stimulus during October. Always the end of the day matters the most. That's the close. We talk about that a lot on this channel. And onto the sectors, what happened? Well, utilities, as we mentioned, was the only one that ended up being positive. We saw a huge sell-off across all the other sectors, and technology sector being 1.55% down as well. Just shows you how much was really coming out of the market. The big tech stocks make a big difference, of course, to the S&P 500 index. So let's get into these technicals. Let's talk together about some of the things that are going on. Well, firstly, VIX is spiking. Now, VIX didn't actually get through the 30. We've mentioned this 30. We've got basically VIX trapped right now, if you're a new viewer, between 30 and 25 on the 4-hour and daily. We're looking for a daily close outside of these parameters. We'd like to see a daily break and close above the 30 with a candle on the daily closed above. And that will pretty much signal further probably selling pressure from the stock market and also a spike into the self-fulfilling prophecy of around 35. Remember, basically with all these channels, they work out to take the distance of the channel and that becomes the self-fulfilling prophecy. We'll also be above this green line here being the 200 simple moving average. So the VIX is showing us incredible uncertainty coming back into the markets, but at the same time, we're not quite above that 30. And it all plays into the fact that when we look at the S&P 500 and NASDAQ in just a few minutes, they're all getting back to the critical support zones, which will probably break at the same point that the VIX breaks as well, if it is to go further bearish in the stock market. So on to US dollar. What's been happening there? Well, US dollar strengthened heavily, and this just shows you that things are very unsure in the markets. We basically came off the 93.40 yesterday. We found a bit of base accumulation and bounced sharply after that. Now, what's important here is we have a 4-hour close now above those moving averages, above the 20 and the 50 moving averages. These are the points that usually act as dynamic resistance or dynamic support, and we spoke about them in yesterday's video. If we go to a daily now as well, we can see we're just tapping that top end side of what was previously the channel resistance. So we're still not out of the woods with dollar strength. We want to see it go a little bit more. We want to go to about 94 and get a close, and then dollar strength should be back on the table. So this stimulus deal is really big news, I think, to the stock market. The stock market wants stimulus. It's mostly where it is right now because of stimulus. I think we can all agree on that. And this needs to move up higher for us to see, of course, the market to go even lower. US dollar strength is generally coincided at the moment with stock market weakness. On to copper. What's happening with our good friend Dr. Copper? Well, on the channel, we always talk about this one because it shows us economic health or weakness. And Dr. Copper showed us some weakness last week before the stock market actually started selling off a little bit. Then it recovered, but it still stayed under what was previous support. I'm on the 4-hour chart here just to show you we're still around that 2.96, and then we rejected that zone, and we're basically back down on an area where if we get another new low, we probably go back and test 2.85. So the further copper falls and the more the copper falls, if the stock market's not falling with it, remember, take that as a very bearish sign, as copper and the stock market are generally linked during economic recovery. And at this point, copper is still looking relatively weak. It's right at the correct zone. And when we look at the daily, it'll make more sense. It's underneath the 20 and the 50 moving averages. It's underneath that very important 2.95 zone. And if we don't see a bounce up tonight in the stock market indices around the world, we could see further copper shorting and therefore also further stock market shorting across the board. All right, well, let's talk about gold quickly. And we're on the 4-hour chart here. And this is a classic case of where a 1, 2, 3 previous support, and this is actually a 1, 2, 3, 4, 5, 6 kind of support, held the market. The 1920 zone, we discussed it yesterday. We said how important this level was for gold for bullish or bearish intent. It acted as the resistance that we thought it would and sold off very heavily. Now, this is, of course, because the US dollar strengthened. No surprises there. We've come back down to previous resistance, so we would expect some buying pressure here and a little bit of a slowdown in the US dollar for now as kind of the markets try to figure out what this stimulus news really means for everything. And then if it does further sell off and make a new low, expect it back into 1950. And after that point, we'll be doing analysis on it. So I wouldn't expect it to get underneath here in the next 24 hours. But if it gets under 1850, it has some pretty bad ramifications for gold. We want it to hold these levels right now if you're a gold bull long term. So on to the US markets, guys. What happened there? Well, we saw a bloodbath at the end of the day. Obviously, 2% is nothing to sneeze at on the NASDAQ, and you can see that with this big red candle over here on the right-hand side. We basically had resistance hold on the S&P 500, which we'll talk about, as that's always the strongest technical indicator. But the NASDAQ now is coming back down to this 11,200 zone. This was going to be our heavy support zone with buying pressure. It's the third touch, and of course, it's also that ugly head and shoulders we talked about yesterday. So we've got the left shoulder, the head, and the right shoulder. Now, we don't particularly love trading it like a head and shoulders, but some people will be seeing it this way. The way I'm looking at it is this is a very good horizontal support or resistance. We've got this 11.2, previous resistances, previous supports over here, and of course, supports now. If we get through this zone and we break and close below, so what that means is that the candle actually gets below the 11,200, closes on the 4-hour, what we usually expect is the market to come back up, test from the bottom side, and this support to become resistance in what we call role reversal, and then the market to further move down to 11,000, find some support where it found previous resistance and previous support, and then possibly even gap fill into 10.8. So there could be some further downside pressure if we cannot hold this 11,200 zone on the NASDAQ. The next 24 hours is going to be incredibly critical for this chart. So let's see whether it holds a close tomorrow. Time will tell. On to the S&P 500. What happened there? Well, we're going to do our analysis here, of course, on the SPX. So always try to do your analysis whenever possible on the real market and not the futures market. You want to see the real trading volume. So we, of course, got an engulfing candle yesterday coming straight off our resistance. So we had basically this 34.20, 34.30 zone as an area where if it broke high and closed, we were seeing green sky or blue sky above, as they say. Not much market structure, of course, on the left-hand side meant that if we did close above this zone, we were pretty much giving a bull signal for the market. As is often the way, the bears just got control due to news, but it could have been any catalyst really, and pushed the market further. Now what we're looking at is pretty much smaller time frame support resistances to try to figure out where the market could be going next. Some people will see this as an inverse head and shoulders as well, setting up on the larger time frames where basically we have the left hand shoulder here, we've got the head, and we've got a potential right shoulder here. And this is absolutely fair if we get through the 34.20 zone. We're starting to get a bit of structure here on the right shoulder with possibly a pull down to the 33.20-30 zone, then maybe a pickup again. And if it breaks at that point, very nice pattern. And I would be alerting myself to that pattern in the future, because this is a great technical analysis pattern if it was to occur in the future. And remember, it's always worthwhile setting long-term goals in the markets. The worst case that happens is it doesn't eventuate and you just cancel your alerts. So we've basically got the market trapped here. There is a chance of a daily inverse head and shoulders. And when we go down to the 4 hour, we'll quickly see that it's testing the 20 and the 50 exponential moving averages as support. This is historically usually a zone where you do see buying pressure come into the markets, as these two moving averages mean quite a lot to the market. You'll notice over here during the bullish trend up, the 20 exponential moving average basically held all the little pullbacks through the aggressive bullish move. And on the way down, when we had those two moving averages really close to each other, they acted as some form of dynamic resistance as well. So we're right at that zone correctly now, but I think there could be even further pressure coming down back into the 33.30, 33.20 zone. Previous resistances, previous supports, we've talked about this quite a lot. If we get and close below this, the bears are back in control of this market. They're back in control, baby. And what that means is that we would see further selling back down to the 3200 zone. Usually you get gap fills, you get zone fills effectively, where momentum and all of the technical traders and all the algorithms start to get involved. And a lot of that will be happening around this 33.30 to 33.20 zone, just like it would have been if we got through and closed above the 34.20 to 34.30 area. So we're still in the middle of nowhere really on the markets, but overall it did hit the resistance. Congratulations to anyone that took that kind of high reward, kind of high risk trade where they shorted straight off the resistance. Anyone that's done that, you've got pretty much around 70% of your expectation back down to the 33.30, 33.20 zone. It's been a pretty wild 24 hours and expected to continue getting relatively wild over the next couple of weeks. I think this is decently large news about this stimulus. We've got FOMC meeting minutes in America tomorrow, and then followed up by that next week we'll have relatively large economic news. Remember, all of this is also underpinned by what's happening with Donald Trump's health as well. If he doesn't do as well as he's expecting, then that can have ramifications for what's going on in the markets. So there's a lot of big volatile events going on, possibly stimulus off the table completely. We'll have to see whether that gets backtracked, but at this stage, that's the deal, and the markets will not like that coming into the election. Stay safe, stay healthy out there, everybody, and of course, happy trading. Bye for now.